Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club for the 6th of April 2016, presented by myself, Phil Carr. So during today's session, we will be covering live market analysis. We will be going through a watch list of trading opportunities, a forecast of where we expect gold, silver, oil to be heading next. We'll also cover a featured market that we're looking for additional trade opportunities on, to answering questions and of course providing live support. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Of course, it's a pleasure to be here on FX Street today as well. For further information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is www.thegoldandsilverclub.com. Okay, so we'll get into it. And first of all, we'll just get a bird's eye view of the market at the moment, what the leaders are, what the major trends are in place currently. So you all know at the moment, some of the top performing markets over 2017 have been the metals. In fact, palladium is now up 17% in 2017. Silver is up over 13%. Gold is up just under 8.5% on the year, had a very strong quarter. And also in terms of the weakest performing markets over 2017 so far, that includes natural gas, which is down over 17%, sugar, which is down over 17%. In fact, sugar looking very interesting at the moment. We'll take a look at that chart as well. We've seen weakness more recently in oil over the month of March, although it staged a bit of a recovery over the last week. We've also seen weakness in a number of the grains markets, including soybeans there as well. So that just gives you a bit of an idea of what the major trends that have been developing so far this year. Again, some of the top performers have been the metals and also the S&P 500, currently up 5% so far in 2017. So with that, guys, we'll move over to the charts. And first of all, today, we'll start off with gold. So gold at the moment, where it's poised right now is quite interesting. So I've got the 200-day moving average in red here, where you can see several tests of major overhead resistance, providing a bit of a brick wall to price at the moment. In fact, we've ricocheted between that level throughout most of this week. And it's been an interesting week in terms of the price action on gold. It's definitely at a decision point here as to whether it is going to be able to break out and close above very important overhead resistance, which currently sits approximately at $1,264 US per ounce. A break and a close above that level would really open up the door to acceleration to the upside for gold. Right now, though, it is definitely getting some overhead resistance around this recent highs. In fact, if you just marry up the recent highs here, if you just, I'll just show you this very quickly on the chart. If you just take any sort of trend channel and you can marry up the three highs, 1, 2, 3, and you can see very clearly traders are taking profit at this zone who are buying, and also some traders are going for sell shorts around this zone. Now, from a sell short perspective, if you get gold right here, and this is the short-term top of the market, it's a great risk to reward. Okay, so if you have a look at this in terms of your stop loss, all it would really need to do is be above the swing highs, approximately the 1264 to 1265 zone. You could look at that on a closing basis, or just look at it on an automated stop loss and a breach above that level. What I'm looking at here would be on the sell side, if it closed above 1264 zone, and if we were selling gold here, I would then look to exit a position on a close above 1264. At the same time, on a close and break above this overhead 200-day moving average, I would also look to be a buyer of gold and potentially take it back up towards the next major overhead levels of resistance. So right now, gold's looking interesting. I suspect non-farm payrolls will be the big mover tomorrow and be the decision maker for gold here, because it is just really consolidating. My blue rectangular box here just shows you how much this price is consolidating and coiling at the moment on gold. There was a bull flag earlier on in the week which broke out clean air from a break above Friday's resistance up to the 200-day moving average. Fairly straightforward trade just to capitalize on a move back towards the 200-day moving average. Found resistance at that level, pulled back yesterday, Initially, we saw a breakdown on the ADP numbers yesterday, which came out stronger than expected. Then into the minutes of the FOMC later on in the evening, gold retraced into the close. So far today, it's not looking that encouraging for gold for the bull side, but it looks good potentially for the bear side if it breaks below 1250. As I said, a good risk to reward, very straightforward for traders. They know where to put their stop loss on this trade. Very straightforward, above the swing high, above resistance, above the 200-day moving average. Good risk to reward if this is a short-term top and a triple top here for gold as well. There could be quite considerable downside. April is normally not a great month for gold, especially as we move into May as well. But the exception to that is the first week of April, where often you can see some follow through to the upside, and it's within the second and third week that normally, from a seasonality bias over the last 5 years, you would expect gold to break down. And that's what I'm looking at. I'm waiting for really at the moment. I'm wondering whether we will have another attempted breakout to the upside, and whether that will get sold into, or it won't be able to break out any higher and look for a potential for another bull trap here, or whether this is it, whether this is the triple top is in, whether it's going to slowly but surely break down, giving a sell short opportunity, or if gold can get the legs off the back of tomorrow's non-farm payroll, depending on the stats and the data that comes out. If it can break and close above the 200-day moving average on a weekly closing basis, that would be quite strong, given the fact that on the monthly chart, gold has produced a strong rejection candle. So you can see very clearly, if we do see a break above approximately the 1263 zone, gold could catch fire here and get going to the upside. At the same time, if this is a failed move, you've got very clearly overhead trend channel on the monthly chart, and we could see a deeper correction start to take place. So definitely decision time for gold. Exciting actually to see how this pans out at the moment. I would be looking towards also silver. Silver's price action. Gold versus the euro. This is gold versus the euro at the moment. Gold versus the euro does tend to lead. Gold against the US dollar. And earlier on in the week, it had a spike high as well. But so far, it has created a lower high, certainly lower than the end of February highs here. And if you look at this rejection candle, which formed actually on Tuesday, we saw a breakdown yesterday, came back down to underlying support from Monday's low, and then retraced into the close. It's not that encouraging that it didn't follow through. So for buyers here, it didn't follow through during the Asia Pacific session. We've got a bit of a rejection candle forming at the moment. So far, we are developing a lower high certainly, and we're developing potentially a lower close as well. So I'm watching this carefully to see how this does close today. Gold euro, gold US dollar, and also the US dollar index, of course, as well. So the US dollar index is definitely finding resistance at the 50-day moving average. A lot of traders very clearly looking at that. You can see it here. Hopefully you can see that nice and clear, my blue 50-day moving average ricocheting at this resistance. So I would suggest, if the US dollar is able to rally, break, close above the 50-day moving average, this will gain momentum to the upside, and therefore we should see gold, silver, platinum sell off. Okay, that's what I'm looking at. Of course, the inverse correlation, and I'm really waiting now for non-farm payrolls to give that head nod, really, to give confirmation for a trade, for a potential breakout to the upside on the US dollar, creating therefore a sell short opportunity on gold, silver, or platinum, depending on which one is your preference. On the flip side of that, we do have a rejection candle yesterday. Very clearly, the US dollar is struggling with a 50-day moving average. It's been a bit choppy today, hasn't really followed through so far. And we've also got the potential for a breakdown as well. So it could really go either way. Obviously, if it breaks down in price, then that would lead to acceleration on gold, on silver, and also platinum to the upside. They're likely to build momentum, and then we could be up and away for the next leg higher for those markets. So I do think a lot rests on tomorrow's non-farm payroll. Hopefully, it's nice and eventful, provides some good volatility and trading opportunities as well. Now, if we also move over to the other metals, we'll have a look at platinum, which has had a disappointing start overall to the day so far today in terms of the bull side here, but it's had a potential trade setting up on the bear side. So you can see here earlier on in the week, or certainly last Friday, closed with a hammer, underlying trend channel, broke out to the upside on Monday, follow through on Tuesday, Wednesday, but rejection candles. And you can see very clearly there's a pennant formation here on platinum. Which way is it going to go? Can it break out? Can it build up additional momentum, close above resistance, and potentially have a resolution of the upward trend? Or are we going to see a breakdown in price, in which case we could go for a sell short opportunity? So I see quite a lot of markets presenting this sort of situation at the moment as we go into tomorrow's non-farm payrolls. And also a lot of markets are trying to set the trend now for the second quarter, for April as well. And we're definitely seeing this. There's a pause on a number of markets. I mean, we go over to the S&P 500, which is quite interesting at the moment. Very clearly, the S&P 500, I'll make this a little bit more clear here as well, finding support at the 50-day moving average as well. We'll just bring that out. You can see here underlying support, the 50 MA, pennant formation as well. You've got support on the chart going back to the December lows, 1, 2, 3, 4, 5 bounces. So it's getting bought at the lower end of this trend channel. At the moment, it's created a higher low on the chart. Overall, I would be looking more on the bullish side than the bearish side here in the short term as we go into next week and as we build up into Easter. Typically, this side of Easter in the build up to Easter would normally tend to dictate seasonality wise that we should get some support here for equities, but we'll see. Non-farm payroll will be the big one tomorrow. We are getting bid back up off a major underlying level of support. The S&P 500, a number of other equities, the Dow Jones included in that, have found support where they needed to in order to hold at these levels and then continue their overall upward trend. Yesterday was very choppy. We saw a breakout to the upside, a surge on the S&P ahead of the minutes of the FOMC statement off the back of the ADP employment number, ADP numbers, which came out yesterday ahead of Friday's unemployment, ahead of Friday's non-farm payroll numbers, excuse me, which are coming out tomorrow. And overall, we had an initial breakout and surge to the upside, came up with resistance. You've got a very clear overhead trend channel here on the S&P right now. Hit that level, sold off, retraced, hit the 50-day moving average, underlying support here. Buyers have come back in again. Very clearly, this could be a higher low. If it closes with a rejection candle on the daily chart, especially if it can get a little bit higher, ideally back above the 2355 zone today, and even better for the buyers if it gets above 2360 into the close today, we could see additional momentum to the upside. So overall, I'm looking for the potential for right now. My view would be that it's more likely that the S&P 500 will break out to the upside and continue this momentum as we go into next week. And gold looks like it's formed a triple top. Too much resistance at the 200-day moving average. I'm expecting a potential sell-off here for gold, but I don't have enough confirmation at this point in time to really suggest that that's definitely the trade that we're going to go for because of how it's sitting. It's quite precarious here. It would only take a 100-point move on gold to the upside, which would be a $10 move for gold in order to break above resistance and in order to take out its overhead levels here. So you've got a V-shaped reversal pattern, possible also cup and handle formation here as well, where it's just come up, paused for a little bit, and it's just getting ready for the next breakout to the upside. So I think it's all really to be decided tomorrow, or of course, this is going to just see a sell-off from this point onwards. It's going to come up against this resistance zone, and certainly if it breaks, if it looks like we get a lower close potentially today, but if we do break below underlying support, the 1250 level, we do open up the door for clean air until 1240, and then it will be looking quite weak ahead of tomorrow's NFP numbers. So watching that very, very carefully for trade opportunities tomorrow. Also, silver had a very good run over the last month. Silver was one of the strongest performing commodities over the month of March. Silver right now is, well, it's not too convincing right now that it's going to follow through. It has managed to break and close above the 200-day moving average over the last week, but it's definitely stalling at this point in time. And you have to watch out for silver because typically silver will consolidate, then have these either big up days or big down days, as we saw going back towards the end of February, where within one day it gave back about 2 weeks worth of gains. So silver, a little bit more volatile from that point of view. And I'll be watching this because, again, if we do get a full-on pullback on silver, it could very easily come back to the 1784 zone. On the flip side, if it can break out and get above this overhead trend channel, which you get lower highs here at the moment, but if it can break out above resistance, close above 1850 or break 1850, that could also lend to an acceleration and possibly quite a considerable breakout. So again, decision time really, guys, in quite a few markets, and I suspect we'll get this decision into by tomorrow's close. We'll have a much better idea of which way the markets are going to go for gold, silver, platinum, US dollar index, and also S&P 500 and so forth. Now, I also just want to put out a featured market. which we're actually, I'll give you two right now, which we're watching very closely. One of these is sugar. And sugar right now, look, I know probably less of you trade sugar, but this is worth having on the radar right now because of the major zone sugar has come back down to. It's retraced to the 61.8 Fibonacci retracement level, taking into account swing low from 2015, swing high from 2016, major event area. Look at this on the chart. 2013, 16 level major bounce. Going back in the chart, back to 2014, several bounces. And again, investors will be looking at this sort of major level here. 2015 swing high. Again, another major area of consolidation and a major event area back in 2016, April as well. And therefore, where we're sitting at the moment, we're getting a bit of a bounce on this area already. And again, I'm sure a lot of you are aware of this, but from a risk reward perspective, traders, of course, they know exactly where to put their stop on a trade like this, trying to catch a potential bounce here on this market. I understand it's in an overall downward trend, and overall trend is your friend until the bend at the end, of course. And whether this is the bend at the end is the question. Are we going to get a potential follow through move here? Is 16 level going to hold? We are in an oversold condition at the moment on this market, but I'm watching this for the potential of a bounce higher here. You can see pretty good risk reward if this was to bounce and manage to form a base at this level. Now, usually what I like to look for on a test of a major level of support like this is not for the price to just bounce off a round number and go up. I like to see some sort of break, flush out some more stops, and then produce a capitulation sort of low, so it reverses and then produces some sort of big spike hammer to suggest that, okay, it's had to flush out, it needed to, and then it's going to reverse higher. It's not as common to see the price just reverse at a major round number like this at the 16 level, but it is a major level, 61.8 fib level, and it's also been a major level on the chart here going back over 4 years. So I would look at this as a potential event area to get involved in a trade opportunity or trade setup. I can see this from risk to reward point of view is pretty good if it holds, if this major level of support does hold. So I am looking at that one as well. And just to put it on your radar too, let's have a look. What else we got? Cocoa. I would just, because of what we're seeing on sugar at the moment, cocoa is also worth a look as well. So if we go over to cocoa's price structure right now, cocoa's also, so far in 2017, it's formed the triple bottom. Cocoa was the second best performing market in the month of March, up after palladium, up over 9%. And if we go over to the monthly chart, certainly major support, previous resistance around the 2014 spike highs here. We've got 2008 low as well. Bullish engulfing candle on the monthly chart, already forming some support. I'm looking for the potential of a longer term trade on this V-shaped reversal pattern coming all the way back up to major overhead resistance. That's not a quick trade though, that's a much longer term trade. But short term, I'm looking to see whether we will break and close above this overhead level of resistance. We didn't want to chase the trade once it already broke out and it got overbought, but it's pulled back to an area of support. Underlying trend channel been consolidating for the last 5 days now, and I'm looking for the potential of a breakout and surge higher here on cocoa. It might pull back further before we see that sort of a move, or it will follow through with a break above the 2130 neckline, the 2130 zone. So that's what I'm looking at the moment for cocoa as well. So cocoa and sugar are worth having on your radar. But I think ultimately a lot of moves, especially on the precious metals, on gold, on silver, are going to be resolved tomorrow on non-farm payrolls. Also, if we move over to oil, oil's looking quite interesting right now. It actually hit the level that we were anticipating yesterday, got a breach back up to the 52 zone, hit the 50-day moving average. And again, I've just outlined the levels I'm looking at here. Essentially, oil right now, I'm either looking for a breakout and follow through back into its previous channels, which would be between 52 up to 55 US dollars per barrel. If it can follow through, this snapback over the last week and a half has been impressive. And also what is impressive with oil is the way it has held its trend channels on the weekly chart. Okay, you can see there's parallel channels on the weekly going back to 2016, and it has really held up to those extremely well. Last week created a bullish engulfing candle on the weekly chart. So far this week, it's already followed through. Previous resistance here is now getting tested again around the 52.10 zone. No surprise to see some profit taking there. Overall, oil looks pretty strong at the moment. It produced a big rejection candle yesterday that hasn't broken down. Oil is short-term overbought, but with oil, it can still rally from an overbought condition. It's not really one of those markets that tends to run out of steam on an overbought condition. Once it really gets going, it can have tremendous moves to the upside. So at the moment, continuing to monitor the oil trade here in the oil market to see whether we will have a potential follow through from a potential break above this overhead level of resistance, which at the moment would be essentially a breach above the 52 zone. If we breach above 52, I would expect additional momentum and acceleration to the upside. If we break below yesterday's low and also today's low, then what we could start to see is certainly this inverse hammer on the daily chart could get triggered and we could start to see additional momentum to the downside. So I think oil as well is at a decision point. So if oil does break below yesterday's low and we start to break and close, especially a break and a close below yesterday's low, would lend to this just being a retracement, and then we could potentially see more follow through to the downside. But if it can break and close above yesterday's high here and manage to get back within this previous zone of consolidation, I think things could get quite interesting and we could see higher prices here in the short term for oil. So lots to be watching as we go into tomorrow's non-farm payroll, guys. And as always, if you would like to get this sort of analysis on a more regular basis, if you'd like to join us at the Gold and Silver Club and essentially get access to our live trade ideas during the week, our live trading rooms, essentially all you need to do is go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. Our portfolio performance over the month of March has been as follows in terms of our best performing trades. So as a lot of you will be aware, we shorted the consolidation at the beginning of the month of March, where we eventually broke down and we broke through major support after we saw oil consolidate for 3 months, breaking down for 325 points profit. We then shorted gold prior to the FOMC statement in mid-March here, taking advantage of weakness on expectation of the Fed going ahead to increase interest rates, which they did. We then reverse position on gold off the back of a change in interest, off the back of the FOMC statement, essentially, and an increase in interest rates. We took advantage of that breakout and the follow-through trade for 335 points profit. So those have been some of the top trades over the month of March. If you would like access to the Gold and Silver Club live trade ideas shared with you, ready to implement, and you'd like access to the live trading rooms as well, which essentially gives you access to the private members academy, live trade setups ready to implement throughout the week. You get access to our live trading rooms, real-time notifications via email and SMS, details of where we are entering, exiting, stop loss, trade management, our weekly trading plan and watch list trade ideas for the week ahead, live trade support and institutional level research and commodity insights to give you an edge in the markets. Again, guys, all you need to do is go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, fantastic. So with that, guys, I wish you all a very profitable trading day and trading on tomorrow's non-farm payroll. Certainly look forward to hear from those of you who will be making application to join us at the Gold and Silver Club. And with that, all the best, guys. We'll speak to you on the next one and have a great day. Yeah, thanks, everyone. Take care. Cheers, guys. Thanks. Bye-bye.